But against this, the backdrop of this is the CEO of JPMorgan doubling down on his warning that economic risks are nearer than before. All sorts of doom and gloom. Let's bring in Kenny Polcari to cheer us up. Good morning, Kenny. Is Jamie Dimon just being too morose about all of this? What say you?
I don't think he's being morose. I think he's actually being realistic, right? I think everyone else is trying to sugarcoat it and tell you it's okay and everything's fine and don't anybody worry. Meanwhile, as you said at the beginning, we've now 15 months into consistently higher prices with no end in sight. So I think what Jamie's trying to do is just, slap a little bit of reality into everybody's view.
So the question being, how do you cool off inflation at this rate and not wreck the economy? There are talk, of course, that the Fed, opening the door to a 100 basis point hike later on this month. Can we handle that, or is that just going to create a hard landing?
Well, listen, I think I've always been in the camp that it's going to be a hard landing. I never thought that they're going to be able to navigate it. And look, they're well behind the eight ball. It's clear they are. CPI and PPI. The PPI was the one that I think shocked them yesterday because that was even much higher. They really expected that to start to pull back. And in fact, it didn't. And so now that 100 basis point conversation is very much on the table. And I think that's now Fed Fund futures are actually pricing that in. I think what's interesting is now they're talking about an intermeeting hike in August, which is a month they usually take off, right? Because they're who's on vacation, who's having a boondoggle out of Jackson Hole. And so there's usually no FOMC meeting. But if there's a hike in August, all that's going to suggest is maybe Jamie Dimon's right, and we better get out in front of this because it's only going to get worse, right? Now, that doesn't mean light your hair on fire and, the place is going to hell in a handbasket. It just means stand where we are.
Right. Well, what does this mean for the market outlook? If you foresee this hard landing, from an investor's point of view, what do you do?
Well, so I think you have to, again, that question's great, but it kind of depends on who you're talking to, right? The time frame, the risk scale. So broadly, you should understand that, if we continue to, I think we're going to continue to have potholes ahead. It's very much a stock picker's market versus kind of a passive market. You got to be a little bit more strategic. You got to do your homework. You got to understand the story and whether or not the fundamental story behind your picks are changing based on what the economy is doing. But look, we've had a lot of damage in the market. Some stocks are down. Some really good quality stocks are down significantly. Look at this. The banking industry, JPMorgan is down 30%. Citibank down 33%. Morgan Stanley down 30%.
Yeah.
These are big U.S. American banks that are on sale right now. And I think in a rising rate environment, even if the economy starts to slow a little bit, these are going to be places where you're going to find some opportunity.
Very good. Kenny Polcari, always bringing his A game. Aren't they terrific? Any one of them are great. Kenny Polcari, thank you so much.
See ya.
They are great.